The clock is ticking for the housing market. A price decline is imminent, which you can take advantage of if you're well positioned. Even if you have a little money, you can greatly benefit from the coming collapse. Before we discuss taking advantage of this, we have to talk about how you'll get cash to take advantage of the bargains. There are two types of real estate investors: the king of cash flow like Robert Kiyosaki, and property flippers such as Jonathan Scott and his brother Drew. Choose one of these methods as your primary way of investing in real estate. People in their 20s use these methods to become millionaires and retire early in life. When cash flow investors acquire property, their primary concern was the amount of money it will return annually. Let's say that they purchased a house for $200,000, which yields $16,000 annually. This shows that the investment yields an 8% return, which will take about 12 years for the cash flow to recoup the initial investment made. After 12 years, the initial investment will be paid off, and the property will keep generating income for infinite returns. This applies not only to residential properties, but also to commercial real estate such as warehouses and offices. Strategies that generate healthy profits over the long term are generally slow. Although this may seem a long period to wait, you no longer will have to trade your time for money, allowing you to work on other businesses to go from rich to ultra-rich. The purpose of property flippers, which makes more money than cash flow in the short term, takes advantage of the capital gains of the property. They either spend time researching the market and then build the house to sell it, or they go buy a house, fix it up and sell it at a higher price. The difference in how you choose which investment styles you want depends on how you want to allocate your time. Taking advantage of the capital gains within the property gives you a higher return, but it's always an ongoing project to buy and flip the house. Cash flow, on the other hand, will take time researching the market, but once the deal is made, you just wait for the money to come in. Black Knight research shows that median home prices fell roughly 1% in July and in August, which hasn't happened since 2008. If you're watching this now, that means interest rates would have increased much more, making this much more relevant and significant than when this video was uploaded. People during the 2008 crash panicked and sold their houses. In hindsight, they should have bought the dip and rented it out for income. Next, fix your credit score. By having a better credit score, you will have considerably better interest rates, which will save you thousands of dollars on your future investments. Obtain a credit card and spend a tiny amount on it, but only on essential items such as diapers and fuel. Then pay it off at the end of the month. Back then people weren't financially stable, but for you who are watching this, it's time to prepare your arsenal. Start saving money to prepare your dry powder to take this shot at the housing collapse. Having cash on hand is never a bad thing. One of the side hustles that you also do is rent to rent, which you take our lease on a property, and with the owner's permission you rent it out on Airbnb. You will provide your landlord with a steady income and you get to profit the difference. It is not as passive as other methods, but an easier way to start. A more lucrative method is to do joint ventures and private loans. It's for people that do not have the time to research the best deals but have a lot of financial ammo sitting in their arsenal. If you are very confident in your ability, then a private loan would be the best way to go. You can offer the investor a fixed return which allows you to use the money to buy the property and gain cash flow, while also benefiting from capital gains over time. The most important part of this method is in finding the deals, because without great deals, you'll find it difficult to make money and pay the loan back. It's easier today due to the internet to find these great deals, and you'll have to focus where everybody else is not focusing. One of these methods is to speak with the landowner directly, which sites like Gumtree list their phone number. They're pretty desperate to sell because Gumtree isn't exactly the first place you'd go to sell your property. This may seem like a hassle, but it acts as a barrier to entry and will allow those to uncover the gems who are willing to work for it. You should also drive around to look at badly maintained homes, such as ones that are boarded up with windows and have long grass. If there's a particular one that looks interesting, you should speak directly to the owner to see if they're interested in selling off market. This decreases the competition, allowing great potential for a lower price. At times banks need to get rid of their properties as well, and they sell the property for less than what it's owed. If you are a cash buyer, auctions or share sales can also be a great way to find deals. Just make sure to verify the numbers with experienced people to verify you made the proper judgment. If you like this video, be sure to subscribe.